Hey, what's up YouTube? In this video, I'm gonna be explaining the importance of markets in sports betting, why I believe every new sports bettor needs to understand how markets work, right? So I view this very similar to when people start playing poker. There's a strategy, right? You gotta know when you should be raising, which hands you should be playing. It's really important to understand the strategy. It's the same thing in sports betting. It's really important to understand markets. How do markets work? How do sportsbooks set and move their odds? All of this is the key to profitable sports betting. And sure, maybe there's the occasional guy, right, who can just outsmart the books with sports knowledge, but that's very rare, right? You gotta remember 99.9% of people lose money long-term on the sports books. And again, it's kind of like poker, right? The best poker players in the world, 99% of them are very mathematical. They understand the strategy. Sure, maybe there's the occasional guy who can just out-bluff the other players, but in general, understanding the math, proven strategies for making money is extremely important, and that's what we're going to be going through in this video. So this is an intro to markets in sports betting, so let's get into it. So sports betting market, it may sound like a complicated term, but it's really simple. All that a market means is it's where securities, I guess is the word we can use, where securities are traded, right? So you have the stock market, which is where you can buy and sell a stock. You have the Forex market, which is where you can buy and sell currencies. And then you have the sports betting market, where you can buy and sell teams or players. So for example, the Eagles are playing the Seahawks. You can either bet on the Eagles, which is kind of like buying the Eagles, like buying a stock on the Eagles, or you can bet on the Seahawks, which is kind of like shorting the Eagles or betting against them, selling a stock. So it may sound kind of crazy, but there's a lot of similarities between the stock market and the sports betting market, which is why it's so important to understand how markets work as a new sports bettor. So the first important thing to understand about markets is markets reflect new information. So what I mean by that is a simple example in the stock market. If a company does really well, they make a lot more money than they were expected to in a quarter, they beat their earnings expectations, typically you'll see that stock price go up, right? The market is reflecting that with new information, that company is making a lot more money than they were projected to. The company is more valuable, right? So the stock price goes up. And it's the same thing in sports betting, right? Books are constantly moving around their lines based on injuries, lineups, stuff like that. So you'll oftentimes hear people say like, oh, I'm betting the under in this football game because it's going to be snowing, it's going to be bad weather. But what people don't realize is that's already baked into the market. The sportsbooks probably have already brought that total down in the game from maybe 41 to 37.5 points. It's already baked into the market. So any public information, by definition, should already be baked into the market. If players are injured, that's baked into the market. If Patrick Mahomes isn't playing, the books are reflecting that with their odds. So really quickly, let's just go through an example of markets in sports betting. And I got this example from today when I was making the video. So it was announced that Embiid, who's arguably the best player in the NBA and for sure the best player on the 76ers, was questionable. So before, the market believed he was for sure gonna play, he was very likely to play, and now he's listed as questionable. He's the best player on the 76ers. So what do you think ended up happening? Well, first of all, the line moved against the 76ers. They went from being big favorites, huge favorites, to less big of favorites. The line moved towards the opponent. But it's not only the money line that's affected, other player props are affected too. So Maxey, who is arguably the second best player on the 76ers, scores the second most points. If Embiid is out, Maxey is going to take more of the scoring load. He's probably going to be putting up more shots with Embiid out. If Embiid is out, Embiid's just questionable. He's not for sure out. But that means Maxey would be more likely to go over his projected points line. So you also saw sportsbooks move Maxey's over 24.5 points from plus 100 when the market believed Embiid was for sure going to play to minus 185. Right? The market is reflecting that now Tyrese Maxey has a lot better of a chance of going over 24.5 points if Embiid doesn't play. So again, we could go through tons of examples like this, but this is just to show you whenever a change occurs, lineup change, injury, even a weather change in football, obviously weather isn't as relevant to the NBA, that affects the odds and the lines that books have set. So the sports betting market, or the odds that sports books are putting out, letting you bet on, it reflects all available public information. Lineups, injuries, weather changes, everything like that. Now I know there's a ton of people out there, I get it all the time, who say, oh, but I actually have my own model and that's what I use to place my bets. I have my own model that's better than the sports books. And I'm gonna give you 2 reasons why if you're using your own model to bet on sports books, it's probably not a good idea. So the first reason is you gotta remember these sports books are pretty smart, right? DraftKings, FanDuel, Caesars, they are multi-billion-dollar companies. They have better models than you. They have better data feeds than you. They have hundreds of engineers working full-time to improve their models and setting lines. So you're not just gonna spin up a better model than DraftKings Sportsbook. Now, the second thing to mention is the market also reflects the beliefs of others, right? So what I mean by that, it may sound a little confusing, is take a look at the stock market, right? If a really smart hedge fund thinks a stock is undervalued and they start to load up on the stock, well, the price of the stock goes up because demand is higher than supply. If a really smart hedge fund starts buying that stock price will go up, right? And the market now has a higher price for that stock. The company is more valuable, and that's reflecting new information in the market that a really smart hedge fund thinks this stock or this company is undervalued. And it's the same thing in sports betting. These sports books aren't stupid. They know who their smart, sharp, or profitable customers are. If everyone smart starts betting on Jabari Smith over 1.5 3-pointers made, the sports books will move odds towards his over, maybe from +100 to -130. So not only are the books updating their odds based on injuries, lineup changes, weather, they're also moving their odds based on where action's coming in, specifically action from sharp or profitable customers. So these books aren't dumb, right? The sports betting market isn't static. Even if the books don't have good models, right, they're gonna take bets from really smart, sharp, profitable, sophisticated customers and use that to move their odds, move their lines until they find a point where they're balancing flow on both teams or the over and the under. So another thing that's really important to understand is how books make money, right? So the way they make money is by charging a spread called the vig. So you can take a look right here and you'll see that FanDuel has a 50-cent spread, okay? They have the Grizzlies, the underdog, at +220 money line odds, and the Pelicans at -270. That's a 50-cent spread. If you want to bet on the underdog, the Grizzlies, you're betting 100 to win 220. If you want to bet on the favored team, the Pelicans, you're betting 270 to win 100. So that's not really fair, right? They're charging a 50-cent spread. So the way that books make money is they're kind of like a stockbroker. You know, the same way a stockbroker will say, hey, I'll buy this stock for 220 and I'll sell it at 270. They charge a spread. The whole goal of a stockbroker is you buy things at 220, you sell them at 270, and you make that $50 spread. And then you ideally have equal action coming in on both sides. And that's basically the same way books work, right? They want to balance money coming in on both teams so they can just make that risk-free spread called the vig. And what books will do is if they notice there's a lopsided amount of action coming in on a particular team, they'll move the line until, again, there's balanced action coming in on both sides. So that's not completely perfect, but that's roughly how the sports betting market works. So it's really hard to beat the sports books long term. They have this inherent leg up that they're charging a spread called the vig, and that's why 99.9% of people lose money sports betting long term, right? And the reason I'm so passionate about understanding markets and why sports bettors need to understand how sports books work, how markets work, is I used to be a trader. Right? So very similar to exactly how a sports book works, the way I made money as a trader was charging a spread. I would buy things at 220 and I would sell them at 270. And all day long, you would hear one guy talking about, oh, this stock is worthless, everyone's got to sell it. And they would sell it at 220. And then there would be another guy across the country talking about, oh, this stock's the best thing in the world, you got to buy it, buying it at 270. And I just made that $50 spread. So long story short, when you're betting on sports, if you're betting with your gut, your emotions, your sports knowledge, and you're not following data-driven techniques, you gotta think to yourself, why am I smarter than everyone else, right? 99.9% of people lose money sports betting, trading long term. So when you are just betting with your gut, you really need to think, why is my opinion better than everyone else's? Now, the point of this video is not to say it's impossible to make money sports betting, because that's not true. Sports betting, just like poker, is one of the few rare forms of gambling where you can actually get an edge and win long term. You can make money sports betting, you can beat the books long term. However, it's not as simple as flipping on the TV, watching sports, and betting on your favorite player. That will never work. The way you're gonna beat the sports books is by following a market-driven approach, actually. So the reason that sports betting can still be really profitable is the market's very fragmented. Every sports book sets their own odds or lines. Every book is doing it themselves. They have their own models to set their odds and lines. So the easiest way to beat the books is by finding discrepancies in the market, right? It's kind of like if you went to Fidelity, E-Trade, Robinhood, and there were different prices for a stock. It would be really easy to be a day trader if you could go to Fidelity and buy a stock for $11 and then go to E-Trade and sell that stock for $14. It would be really easy to be a day trader, right? And that is possible in sports betting because all these books set their own odds and lines, and sometimes they screw up. So I'll give you a really simple example is right here. This is a play I found for today that I'm on. You can see Underdog Fantasy has Looney's line. They have his line at 11, right? If you look at every other book, every other market data point, all these other sports books have his line at 11.5 with the over as the favored or the juiced outcome. So a good bet that I would want to be on is Looney over 11, rebounds plus assists, because again, all the other market data points, all the other books have his line at 11.5. So again, you can make money sports betting with arbitrage, positive EV, middle betting. There are a lot of reliable strategies for beating the books long term. However, it's a little more complicated and it's gonna rely on following a market-driven approach. Anyways, I hope you found this video helpful. As always, if you have questions, feel free to email me or drop any questions below. And thanks so much for your time.